Testing, testing. Fine. Yeah. Testing, 1, 2, 3. We will begin our proceedings shortly. Can I kindly ask the MPC members to make their way onto the stage? We will begin in the next 3 minutes. Okay, sure, Governor. In case you need it. Governor Epson Wanguta, Mr. Lesego Moseki, the Governor of the Bank of Botswana, Deputy Governor Mr. Nicholas Mukasa, Deputy Governor Dan in absentia, members of the Monetary Policy Committee, management and staff of the Bank of Namibia, members of the media, distinguished invited guests, ladies and gentlemen, good morning. Good morning and welcome to the Monetary Policy Announcement for August 2026. We are delighted to welcome our media practitioners and wish to thank you for honoring our invitation and joining us this morning. We also extend a warm welcome to our online viewers and those tuning into the broadcast coming to you live from the Bank of Namibia auditorium. This morning, we are privileged to be joined by Mr. Lesego Moseki, the Governor of the Bank of Botswana, and members of his delegation. Welcome, Governor. We are also pleased to once again be joined by Ms. Helena Ndala, our sign language interpreter, whose participation ensures that our communication remains inclusive and accessible. Over the past 2 days, the Monetary Policy Committee, chaired by the Governor of the Bank of Namibia, convened to discuss and determine the appropriate monetary policy stance for the country for the next 2 months. A decision was reached yesterday, and the Governor will announce and unpack it shortly. Thereafter, we will welcome questions from the media practitioners in the room. Those will be the proceedings for the morning. Once again, welcome. My name is Nafiko Hamunime, and I work for the bank's Strategic Communications Department. With those introductions out of the way, let me now welcome the Governor of the Bank of Namibia, Mr. Epson Wanguta, to deliver the monetary policy announcement. Governor, the floor is yours.
Thank you, Naufiko Munime, the director of this event, Governor Lesego Moseki, the governor of the Bank of Botswana. We are glad to have you here as our guest, together with your management. The Deputy Governor of the bank, Mr. Nicholas Mukasa, Deputy Governor Leonard Dunn, members of the Monetary Policy Committee, the management of the Bank of Namibia, the members of the media who are present here. A very good morning to all of you. We have gathered here, I think as it was announced by the Director of Ceremony, to share with you the monetary policy stance or the decision that was taken yesterday, and we want to share it with you today. So on the 10th and the 11th of August this year, the Monetary Policy Committee of the Bank of Namibia held its fourth bi-monthly meeting of 2026 to decide on the appropriate monetary policy stance for the next 2 months. Guided by a comprehensive assessment of the latest economic indicators, and also mindful of the need to safeguard the peg between the Namibian dollar and the South African rand, the MPC unanimously decided to maintain the repo rate at 6.75%. Now, getting a little bit into elaboration of that, looking at the global economy, just a short summary. The global economic activity moderated since the previous MPC meeting, while growth prospects remained largely unchanged. Monitored stock markets strengthened, while bond yield broadly increased. Most key commodity prices rose relatively to the levels at the previous MPC meeting. Inflation eased across most monitored economies, while policy rates remain broadly steady. Available indicators suggest that growth held firm in several monitored economies during the second quarter of 2026. Despite slowing, growth remained relatively solid in the United States, in China, while economic activity improved in the euro area. Overall, the global economy appears to have weathered the ongoing negative supply shock better than initially anticipated or initially projected. This is partly due to investment in technology. Looking ahead, global growth is forecast to remain broadly unchanged relative to the previous outlook. In particular, the International Monetary Fund, in its July 2026 World Economic Outlook, projected growth to slow from 3.5% in 2025 to 3% in 2026 before recovering to 3.4% in 2027. Risk to the outlook remain tilted to the downside, particularly stemming from the potential re-escalation of geopolitical tension in the Middle East. Moreover, commodity price volatility, eroded policy buffers, and supply shortages could further drag on global growth. Key global stock markets rallied since the previous MPC meeting, while bond yields edged higher. Notably, the Standard & Poor's 500 and the Johannesburg Security Exchange All-Share Index recently recorded gains, supported in part by robust corporate earnings. Similarly, bond yields remain elevated across most monitored jurisdiction, primarily reflecting inflation concerns amid geopolitical risk premium. Prices of most commodity increased since the previous MPC sitting. The price of gold rose somewhat on the back of safe haven demand amid reduced optimism regarding the higher US interest rates. Similarly, uranium spot prices also increased, ascribed to sustained demand for clean energy. Zinc and copper prices also remain elevated on account of demand and supply imbalances. In contrast, rough diamond prices remain subdued, and this is due to weak demand precipitated by competition from lab-grown diamonds. Brent crude oil prices remain elevated since the last MPC meeting. Prices initially declined, but as the conflict in the Middle East re-escalated, they soared close to $100 per barrel before retreating to $88 per barrel most recently. This clearly illustrates persistent inflationary pressures emanating from the prolonged war. Despite persistent inflationary pressures, the most recent inflation prints diverge across the most monitored economies. Since the June 2026 MPC meeting, inflation was lower in the US, in the Euro area, in the United Kingdom, in Brazil, and in China, while it rose in Japan, in India, in Russia, and in South Africa. Nevertheless, inflation has generally remained above respective central bank targets, partly reflecting pass-through effects of the energy shock. Consequently, the IMF projects global inflation to accelerate from 4.1% in 2025 to 4.7% in 2026, before receding to 3.9% in 2027, a 0.3 percentage point and 0.2 percentage points respectively above the April 2026 forecast. Monetary policy rates across key economies remain broadly unchanged since the last MPC meeting. Accordingly, most monitored central banks, including the South African Reserve Bank, kept their policy rates steady since the last MPC meeting. The exceptions were the Central Bank of Brazil and Russia, which reduced their policy rates. When it comes to the domestic economy, again, just to give you a summary before I elaborate, domestic economic activity remained weak during the first half of this year, while inflationary pressure increased over the inter-MPC meeting period. Growth in private sector credit extension remained subdued, whereas the trade deficit worsened since the previous MPC meeting. Meanwhile, the preliminary stock of international reserves remain adequate to support the currency peg and meet the country's international financial obligation. Now, coming to the elaboration of that, domestic economic activity moderated during the first half of 2026 relative to the corresponding period of last year. The available high-frequency indicators and data suggest broad-based sluggish economic performance, especially in the mining sector, in manufacturing, electricity generation, and transport sectors. Meanwhile, improved economic activity was noted in the agricultural sector, wholesale and retail trade sectors. Looking ahead, the growth outlook has been revised downward, with growth now focused to recover from 1.7% in 2025 to 2.1% in 2026, a 0.5 percentage point below the previous projections. The downward revision largely reflect contractions in the primary industries, alongside moderation in the secondary and also tertiary industries. Downside risk to the outlook remain slower global growth, the foot and mouth disease outbreak in our neighboring countries, and also a potential El Nino conditions. Domestic inflationary pressures have remained elevated since the preceding MPC meeting. Accordingly, annual headline inflation rose to 4.4% in June 2026 from 4.1% in the preceding month, primarily driven by high transport price inflation. Nevertheless, annual inflation averaged 3.2% during the first half of this year, lower than the 3.6% recorded in the corresponding period of last year. This is mainly due to lower food price inflation. Going forward, domestic inflation is projected to remain elevated. In this regard, inflation is expected to rise from 3.5% in 2025 to 4% in 2026, then slowed to 3.9% in 2027. The 2027 projection is 0.3 percentage point above the previous forecast, underpinned by the assumption of protracted geopolitical tension in the Middle East. Annual private sector credit extension growth slowed relative to the last MPC meeting. Accordingly, the private sector credit extension growth decelerated to 4.5% in June 2026, a 0.3 percentage point below the level recorded at the previous MPC meeting. This was mainly due to lower uptake of credit by business and also household sector. Similarly, private sector credit extension growth over the first half of 2026 was marginally lower, averaging 4.5% compared to 4.6% recorded in the corresponding period of 2025. On the external sector, Namibia merchandise trade deficit widened during the first half of this year. Accordingly, the trade deficit worsened to 19.3 billion Namibian dollar during the first 6 months of 2026 from 12.8 billion recorded in the same period of last year. This was predominantly driven by elevated import payments, particularly from the mineral fuels. Going forward, high import prices alongside weakness in the diamond and gold subsector could weigh on the external position in the near term. The preliminary stock of international reserves, however, rose to 57 billion at the end of July 2026 from 55.4 billion at the end of May 2026. And this is largely supported by SACCU receipts and customer foreign currency placement. At this level of reserves, foreign reserves translated into an estimated import cover of 3.5 months, which remains sufficient to support the currency peg and also meet the country's international financial obligation. Now, coming to our monetary policy stance, following a comprehensive review and extensive deliberation, the MPC decided to keep the repo rate unchanged at 6.75%. Similarly, the prime lending rate remains at 10.25%. This policy stance is deemed appropriate to support the stock of international reserves and safeguard the one-on-one link between the Namibian dollar and the South African rand. Now, again, in determining the appropriate monetary policy stance, the MPC considered the need to close the interest rate gap between Namibia and the anchor country in order to stem the capital outflows alongside the elevated inflationary pressures. However, upon deliberation, the committee opted to keep the repo rate unchanged, reflecting a balanced assessment of a subdued economic activity, a relatively benign inflation outlook, and also looking at the sufficient foreign exchange reserves that are at our disposal. So that is the position that the MPC have taken. And again, I put that paragraph to be the last, just to give you the gist of the things that we look at in balance for us to arrive at the decision. With this, I thank you, and now we can open the floor for questions. Thank you very much.
Thank you very much, Governor. We will now open the floor for questions. We have microphones stationed on either side of the stage. Please make your way to either one of those microphones. Remember to also introduce yourself and state the name of the organization that you represent before asking your question. Are there any questions in the room?
Governor, good morning. I have 4 questions, just 4, only 4, and possible follow-ups later. So the first question really is about the direct clearing pathway. We have been discussing oil and gas investments. We have been discussing how our economy is growing or how we think it's going to grow. However, receiving money in Namibia is quite a process. At most, I think it would take you about 5 days for you to receive money. When somebody sends you money from abroad, it will take about 5 days for you to receive it. Now, considering where we are heading towards a nation, what is the Bank of Namibia doing to address these very long waiting periods before we can receive money in country? Have we started discussions on a possible clearing pathway so it's easier for us to receive money in the country? 2, I would really appreciate an update on the retail bonds. How far are we? Who do we still need to talk to? Is everything finalized, and when can we finally start investing? The third question is on the benchmark interest rates. I understand that South Africa is going to be moving towards Zeronia this year from Chaiba, if I'm not mistaken. They have already started the winding down, and I think they have also started posting the Zeronia benchmarks rates on their website. So I just want to know what we are going to be doing. Do we continue with the current rate that we are using, or are we also going to move away from it? I remember, I think last year, Mr. Musaka, Mukasa.
Deputy Governor Mukasa.
Yes, he did mention that they are yet to start consultations with commercial banks. So maybe we can just get an update on that. And then lastly, South Africa passed a law, I think it was about 2 years ago, if I'm not mistaken, where they required that all commercial banks should report how much the highest person is getting paid in the bank vis-a-vis the lowest. It's part of their annual reports. And this question really stems from complaints. One of the commercial banks was about to go on strike recently, and one of the complaints that were put forward was that you can't be earning this much when I'm earning this much and I'm making you the money. So is the Bank of Namibia looking to, introduce such a law so that we can know how much everybody is earning? Those are the first 4 questions. Thank you.
Thank you very much.
Thank you very much, Shania. I think we have a second question, and then we can address those.
My name is Priscilla. I'm a journalist at the New Era newspaper. So my question is, as the governor of the Bank of Namibia, what is your advice to the Namibian people, especially looking at the current economic uncertainty? And the second question is, there are economic opinions that indicate that value addition to the minerals such as uranium and gold is not possible by 2030. What can Namibians do to reduce unemployment? Thank you.
Thank you, Priscilla.
Good morning, Governor. Herta Kanjo with Future Media. I have only 2 questions for the Governor, and that is, does the bank agree with the IMF's assessment that Namibia's current borrowing trajectory is a risk to financial stability? And secondly, at what point does Namibia's public debt become a serious concern to the banking and financial sector?
Thank you, Hertha. Governor, over to you.
Very good. We have really been trying to notify our colleagues from the media that when we are addressing monetary policy, we should prioritize those issues that primarily around the monetary policy. But of course, we will not just be pushing away all other issues. But again, you also do not really want to downplay the issues related to monetary policy, and then we give privilege to the other questions that are completely outside the scope of monetary policy. So let me touch on the first couple of questions. I will also allow my colleagues, I think I will give some of those questions as well to my colleagues to be able to handle. The question on the retail bonds and the one of the benchmark on Zeronia, Deputy Governor Mukasa will touch on that. So I think that's a question. And then the question on the value addition, I will allow the member of monetary policy, Helvi Philippus, also to touch on that. And then the question on the borrowing risk to financial stability, I will allow our chief economist, Dr. Emma Hayambo, to touch on that. And then I will address the rest of the questions that are raised. So now coming to the first question by Shana regarding the long process that it takes for money to clear. I think we need to recognize that if I compare the clearing of money now with the clearing of money, say 5 years ago, we more or less have really reduced that process by about more than possibly 3 days. I know that when the money is transferred from part of the closed jurisdiction, say like from South Africa or from Botswana to here, depending on the corresponding bank that has been used, that money is not supposed to take more than 2 days. And I'm not really fully aware of the experience of 5 days of money taking long from where the money has been transferred to come to Namibia. I know that when it comes to receiving money, particularly from outside, of course, maybe of your family members who are transferring, necessarily they are not maybe using full corresponding banking. I think they are using some other channels and other means. That process, of course, may take slightly longer, but again, I don't believe that it should be up to 5 days. And as a region, it is something that we are addressing. We are working on the cross-border payments, I think, at the SADC region, and that cross-border payments will ensure that the movement of money within the region and also outside the region coming within the region, that process is also expedited. And when I'm talking about to expedite that, it is more or less to make that payment instant. In other words, you press the button and within few hours, that money should be received on the other side. I think that's really, in essence, the process that we are working on. But again, even if you make the money instant, there are risks that comes with that. If you allow money just to come quickly, you press the button and the money is through, it becomes completely irreversible. And we know very well with the cyber attacks, the cyber security that many institutions, many countries are facing. It is also one of the risks that we need to manage, particularly when we make payment instant at any point in time. So that is really the risk that we need to think about. The issue of commercial bank remuneration, again, on our side, we have not yet taken that decision to dictate what should be the payment of the executive of the commercial banks. That's not something that we think that we really also want to get into that territory. I think it's a prerogative of the board, is the prerogative of the financial institutions, because you cannot only do that kind of regulation for the banking sector, then similarly, it is also expected that you will start also dictating that other sectors should also be treated the same. We know where your question is coming from, mindful to say that commercial banks are holding people's deposit. The key aspect is that as long as the deposits of the public is safe, they are managed well, there is safety in that, and as a central bank, our responsibility is to, at any point in time, to ensure that there is financial stability, the banks are managed properly, and that is really our main preoccupation. Regarding the question on economic uncertainty and what kind of advice one will give to the Namibian. It's true, we need to recognize that the economy is going through a dip. But again, as much as there are challenges to the economy, there are also opportunities that we see. And I think those opportunities, we need to seize them. Those opportunities that we see are the new industry that are emerging, both from the renewable and non-renewable resources, is for us as a nation to continue preparing ourselves in terms of the skills, to train our people and equip them with the right skills so that once those opportunities are presenting themselves, they are ready to be able to seize and to benefit from those opportunities. Particularly when it comes to oil and gas, it is completely a new industry. Our people were not exposed to that, and hence we shouldn't only be waiting until production starts. That preparation should start now. After a final investment decision is taken, it takes about 4 to 5 years before production starts. Then, because we are hearing that there has been oil discovery, the preparation is right now to start preparing ourselves, equip ourselves with the necessary skills that will be needed in those specific industry. Of course, oil and gas industry comes with its spin-off sectors that will also be created. And there is a local content policy that government has really put in place. And through that, again, preparation from entrepreneurs to be able to serve that sector from the local, from things that are manufactured locally. I think that will really be the opportunity that all of us have to seize. On the question of value addition, I think that my colleague will touch on that. What can Namibia do to reduce unemployment? We know very well that our country is endowed with mineral resources. With this new discovery of oil and gas is also another addition of the sector that will be coming on stream. We recognize very well that these sectors are all capital intensive. They will not really be able to create the necessary employment that the country will need. Because if you look at the number of graduates that are leaving school and that are in search of employment, compared to the jobs that the economies are creating, there is a serious mismatch. What we need to do, of course, is what the president has also been advancing, the value addition to the resources that we are creating. Now, when you talk of value addition is any process after the mineral, for instance, has been taken, any addition that you, a value that you add to that before you export it. I know that in the Norwegian case, for instance, in terms of oil and gas, one of their policy was that before the oil is exported, it must first land on the Norwegian soil. So that in itself was a value addition. Why do I say it's a value addition? Because when you land it on a country that is producing, like on the Norwegian soil in that case, there must be facilities that should be prepared to be able to absorb that product before it is exported. Through that, additional employment can be created. I just mentioned that as an example. I'm not saying that that should be done the same, because the complexities and the dynamics in the time period where we are completely different. But again, the path of creating value addition to those products where value addition will be created, and also the path of training our people to be more entrepreneurial and to be able to initiate and manufacture certain things within the country, I think we should never give up. It is a path that we need to pursue. On the last question that I'm addressing before I give it over to my fellow MPC members, the debt We know that the country, the debt level is standing at around 65% of GDP. At the moment, at that level, the country can afford to service that debt. What we need to make sure is for the debt level not to grow faster than the economy. For us to be able to offset the level of that debt growth, the economy must also start growing. But of course, recently we have seen that the economy is not really growing at the level that we are anticipating that it will be able to offset that. So what is it that we need to do? I think is for us to be able to adjust what we can control. And that adjustment could be in a form of controlling the expenditure, particularly the current expenditure. I think those are the areas that we need to make sure that we can control. And through that process, we will be able to make debt sustainable. With this, let me just hand it over to Deputy Governor Mukasa, or to Emma, and then to Helvi, and then Mukasa.
Thank you for the question on the retail bond. Maybe just as a reminder, so when we faced this question at the previous MPC meeting, what we guided was that we had to go back and reconstitute how this retail bond was going to be rolled out to the market. One of the things that we wanted to do was to make sure that we have sufficient manpower that's going to help us to roll out this project. So at this stage, as we speak, we are busy finalizing and onboarding the resources which will support us to launch the project. In terms of timelines, when we can expect this product, we were looking at the first half of 2027. So right now, for this year, we wanted to focus really on capacitating, redesigning, and then agreeing on what technology would make sense for us to be able to redeploy the retail bond solution. So in the first half of 2027, this is the target that we've set ourselves as the Bank of Namibia that we are also communicating to you. And then on the second question regarding JIBA, so we do know that JIBA ceased to be made as a reference at the end of April 2026. And in place of that, there is Zaronia. So a lot of the contracts that are now being written, looking for a reference rate in our market and in South Africa, they have moved from JIBA. They are now using Zaronia. So on the Namibian side, we also constituted a committee that's going to look at the appropriate benchmark, because the corresponding benchmark that we have in our market is WIBA. So this committee is working. We'll be looking for solutions that will come from them. So including the benchmark that is going to replace WIBA and when that can be made official. So there is some work, and we'll communicate with you once we have received recommendations from this committee. So Governor, those were the two that I had to address on my side. Thank you.
Good. Helvi?
Thank you very much. Perhaps just to speak to the question of value addition, I think you specifically spoke to gold and uranium. I think in general, in terms of the approach to value addition, or what we call beneficiation, there has been a lot of empirical evidence, even looking at other countries, in terms of how do countries develop. And I think it's important for us as a country to not approach the question of value addition and beneficiation simply from a resource endowment point of view. In other words, you want to beneficiate gold just because you are a gold producer. I think it's important to understand that the value addition path, or the mineral beneficiation process is different for different minerals. And most importantly, the skills that are required for producing minerals are different from the skills that are required to add value to to such minerals. So as a country, I think when we approach the question of value addition is for us to look at what minerals do we have, in what quantum or what level of endowments are those, how far are we from the markets to which we are selling these minerals, and what skills do we possess already in the country that will enable us or make it easy for us to add value to those specific minerals that we have natural endowments in. So I think this work has been done for Namibia, and I think, as you know, it has worked in for some minerals. For instance, we did have a thriving diamond processing sector in the country. So it hasn't happened for other minerals, but I think if you look into deeper in terms of what is the next step to add value to that specific minerals, it will give you an answer as to why it hasn't happened for us. And I think for Namibia specifically, one of the main difficulty that we had has been always in terms of the quantums of what we produce. Is the uranium that we produce sufficient in quantity to warrant you to build a nuclear reactor as a country? So those assessments you have to make and look at what is the quantity of what you are producing and what is the next step in value addition, and does it make economic sense for you to pursue that path before we go for it. So I think as a country, specifically looking at the work that we have done in previous years, we have looked at Namibia as a country to try and see what are the potential next engines of growth that we could develop as a country. And I think from a mineral beneficiation point of view, most of the assessment was pointing to the fact that the jump to get from the production level where we are to move to beneficiation will be a little bit more complex and difficult for a lot of the minerals. But if you have sufficient quantities in one mineral, you probably could pursue that. But for most of them, it proved to be difficult. So I think in terms of the conversation and the work that we have done, we had come up with like an economic diversification strategy that we worked on, I think, between 2020 and 2022. And that economic diversification strategy had really focused on identifying the existing skill sets in terms of know-how that is present in Namibia. And given that level of know-how that we have, we went then on to identify what specific industry does the know-how that we have present in the country have an ability to be channeled into. And we had identified a specific number of industries. I think we went up to I think it was 72 products, if I'm not mistaken, that we had identified that have potential for us to undertake economic diversification into. And that's work that the NIPDB had been spearheading in terms of now having identified the specific industries that we could diversify into, can we then have a conversation with existing players in the country that already are operating in those sectors to try and identify the binding constraints that are facing those operations for us to understand why they're not scaling up, for us to enable them to basically increase the size of production of those specific products, and then also to undertake specific investment promotion targeting investors in other countries that are operating in those specific industry for us to try and attract them to come to Namibia. So I think in terms of your question as to what can be done to try and reduce unemployment, yes, value addition is one way that you could look into, but I think an easier jump or an easier step forward would be for us to have those conversations in terms of what are the specific other sectors, not just the sectors for which we have minerals that we produce, but look at other sectors that have value, specifically along the different agricultural value chains. I think we have seen the type of activities that have come up, for instance, with the production of blueberries, production of grapes in the south in terms of utilization of those water resources that we have. What other sectors can we undertake as a country and really start the hard work of having public-private sector forums and discussions for us to understand what are the binding constraints that the private sector is is facing. How can government or us from the public sector assist to remove those binding constraints so that those sectors can expand, and then we can create more economic activities and subsequently employment?
Good. Emma?
I think the question was whether the Bank of Namibia agrees with the IMF that borrowing can become a risk to financial stability. I think borrowing, and especially when it leads to, for instance, excessive debt levels, it can actually become a risk to the financial stability or the financial system, and that is because it can strain the financial system, and if borrowers are not able to service the debt, and that leads to instability in the financial system. Also, if we have high-level debts, for instance, that can lead to increased interest rates, and that can then cause also the cost of borrowing to be high and therefore reduce availability of credit and so on. At the public sector level, because the question was also at what rate does public debt become an issue, I think maybe just to say, we have seen the efforts by government, for instance, to implement effective fiscal policy. I mean, it's not always easy, but I know as Namibians, we know that there have been some efforts and there have been some talks coming from the public sector, for instance, to try and manage our public debt. One example that I can give is there are thresholds in place, and it's not a secret that we have surpassed our internal thresholds, for instance, but also even at regional levels, there are other thresholds. SADC is at 60% of GDP, and Governor had alluded earlier to the fact that we are currently at 65% of GDP in terms of our debt. So I think, again, I want to say in the midterm, there are efforts also to try and reduce that and probably bring it down to 60 or so. Is that credible? I think it is. We are coming from high levels, 75% of GDP, I think 2 years ago and so on. And we are finding ourselves at 65% of GDP now. So there are efforts, and that is exactly because of the acknowledgement that high debt and high borrowing is and can become an issue, not only for the financial system, but also for the country at large. Thank you.
Good. Any further questions?
Thank you very much, Governor. Please go ahead, Toivo.
Okay. Francis Reuters. Governor, with private sector credit extension slowing to 4.5 in June, what structural impediments beyond the lending rate are hindering private credit uptake? And what interventions are needed to unlock capital for businesses? Thank you.
Are there any other remaining questions before we close the floor?
Good morning. I'm Okhane from NMH. Just two questions. One relates very much, touches on the issue of monetary policy. The bank announced plans to include gold as part of its reserve. So how far along are you in that process? When does the bank officially start taking gold, whether it's in its vaults or elsewhere? And then secondly, it relates to the Welwitschia Sovereign Wealth Fund. How far along is the legislative framework that will formalize the bank managing the fund? Thank you very much.
Very good. That's it?
That's it, Governor.
There's a question.
Oh, there's one online question. Josie, please go ahead.
Governor, this is from Kaula Nongo from Bloomberg. She asks 4 questions. The first one, we are seeing several African central banks allowing financial institutions to hold more yuan reserves to ease the cost of payments in Namibia. Is Namibia considering the same? Earlier this year, the European Union introduced a new swap line also to lower costs. Has Namibia tapped in, or is it considering doing so? Then what other mechanisms are you looking at to lower the cost of transactions? Lastly, how has your plan to increase your gold reserves gone? Thank you.
Good. Let us start with the one of gold reserves. DG Mukasa, I think the one by Ohone is also on gold reserves, and by Kaula as well, touching on the gold. Maybe you can address that. Helvi, you can address the one of Helvetia, where we are now. So I think those are the questions.
Okay. Thank you very much, Governor. So in terms of the gold purchase program, we're looking at it in the following manner. We have what we call the phase one. So the phase one is really where we are accumulating gold, and which is the phase where we are in now. We've been buying trenches, on a monthly basis. So for phase one, we are hoping, which comes to an end in the first quarter for next year. We want to ensure that at least we have 3% of our reserves dominated in gold. So that's the plan that we have for phase one. And that is it's basically in full swing at this stage. The one thing I also just want to add, is that we are obviously engaging the local mines. So we are buying this gold from the local mines, and we're also paying in NAD. So we want to, acquire this slowly and steadily. One of the questions that we normally face from time to time is, is there plans to increase this beyond the 3%? So the answer to that is we don't have that answer just yet. So we want to first of all focus on phase one, and then in the first quarter of next year, then we can sit as an institution and decide and say, look, fine, we are now at the 3% target that we wanted for the phase one. What do we do now in phase number 2? So that's what really I can say on the gold. So that's already in full swing. Our gold is part of our reserves at this point. Governor, maybe I can also address the question around the yuan. So normally every year we look at the trade patterns in the country. We look at the foreign liabilities of the country. So of course, the role of yuan has been increasing over the last 5 years. So already we hold at this point in time a small part of our reserves in renminbi, so we've already taken that into account. In fact, it's not a new addition. It's something that we added, I would say, about 6-7 years ago, where we decided to add the yuan to our reserves. Thank you.
Okay, just to speak to the legislative framework for the Welwitschia Fund, I think as has been was communicated as a policy position when the fund was launched back in 2022, was that the government has started the process of developing the Sovereign Wealth Fund bill. So that bill has gone through the process of approval, which are various steps that needs to be undertaken at government level. At the moment, the bill, I think the lengthiest part of the legislative drafting process is to take the bill through the legislative drafters. I understand that process has been completed. There is a certified legislative drafted bill. I think the ministry is just satisfying itself with that version that came back from the legal drafters. And once that is done and the ministry is happy with the revised version, it will then go to the Attorney General for certification, and thereafter it will be submitted to Parliament for tabling, which we understand the ministry still has the intention to do that during the course of this year.
Good. So on the question by Francis regarding the private sector credit extension that is subdued, if I looked at the monetary policy, I think where it is, I believe the monetary policy stance is quite supportive. Looking at the level of interest rate where it is now, it's supposed ordinarily to support the uptake of credit by both household and businesses. But I think the biggest challenge and the hindrance that I can really point out to is the low economic activities that we are experiencing generally in the economy. And that is for the fact if there are slow economic activities, obviously businesses are taking credit to be able to grow their businesses. But if there are no strong economic activities that are visible and that are coming up, obviously that will also affect the uptake of credit. And I think that's really one of the strongest singular reason why the uptake of credit by both businesses and household are also low. Of course, at the same time, when it comes to household is also slightly, when we look at the numbers, is also indebted. Again, you can only take credit when you have got space. But if your space is completely exhausted, economy and for the economy to start growing fast once again, I think that would really be able to revive some of the credit uptake that we have seen in double digit in the past. Regarding the lowering the cost of transaction, we are approaching that from two fronts. The first one, which is not that popular, is to do it through regulations like the determination controlling fees and charges. But again, we are also doing that in a very measured way. We have issued determinations that are addressing the issues of fees and charges. That has really been raised as a big concern by the public, that fees and charges, particularly by the financial institutions, are on the high side. But also we need to be mindful that we are in a vast country. When you are providing services in a country that is vast, the per unit cost becomes so high. And businesses find a way of recovering that through the services that they are offering. And through that determination, that's where, in a measured way, in a very reasonable way, we are trying to guide the financial institutions that are falling under our jurisdiction, that be reasonable, in only impose and recover the cost that are fully within your ways of offering that service to the client, but do not be excessive. Otherwise, the services will be completely unaffordable. That is what we are doing on one front. On the second front, which is quite a popular way, it was also for that reason why we are pursuing now introducing the instant payment solution. So these are, again, all effort of trying to make our financial system quite dynamic, very inclusive, and also affordable. Again, I think it's a way of addressing and lowering the transaction cost. On the question of the soft loan offered by the EU, I think we have not really fully applied our mind on that. I think those are the only questions.
Thank you very much. Can we please give the Governor and MPC members a warm round of applause? With that, we have now come to the end of our proceedings for the morning. But before we close, we wish to remind our viewers that this afternoon, the bank will be hosting its annual monetary policy dialogue, which will be live streamed at 2:30 p.m. across the bank's social media platforms, and we encourage our viewers to follow the proceedings happening online. We're also pleased to guide that the Bank of Namibia is hosting Governor Moseki and the Bank of Botswana delegation as part of a broader benchmarking visit that's focused on knowledge exchange across key central banking functions. As a central bank, of course, we value this opportunity to strengthen cooperation and peer learning between our institutions. And now, in closing, and on behalf of all of us at Bank of Namibia, thank you very much for your attendance and your participation. For those of us in the room, let us continue the conversation in the foyer outside. Until next time, thank you and goodbye.